Hello everyone. In this video, I will be briefing you about FIN5063W4A, where we will be working on a profitable company. Till now, we worked on different types of non-profit organization where we try to find some financial information of their performance, and we try to generate some ratios using which we explained how those companies, those trusts or NGOs were performing. But in this task, we will be working on a profitable organization, a regular commercial businesses, for which we calculate some kind of financial ratios to assess their financial stability. So, as a part of this task, we are supposed to calculate four different ratios, and we are supposed to explain what is the purpose of calculating that ratio and how that ratio we will explain the financial stability of the organization. We have to compare for two different years. We will be calculating each ratio for two different years, and based on that, we explain how the change happened when compared to one year to other year. Okay, so this difference we have to calculate. Definitely, you should calculate. If you are in 2020, you are supposed to calculate 2019 and 2018 work. Otherwise, if 2020 data is available, 2020 and 2019 data you should use, and for each year you are supposed to calculate the ratios, and you should interpret how the what are the results you got, and based on that result how you can explain how the change happened between two different years, past year and the present year. Okay, whether it got improved or not, we can explain those things. Okay, based on the comparative analysis, you will come to the conclusion that whether financial stability is existing for the organization or not. Okay, that is the main purpose of doing this task. Now here, I provided you some kind of the links which will be helpful for you to complete the activity. The first one is a link which clearly shows different types of ratios that will be used for explaining the financial health of the organization. For example, some common ratios used to calculate financial health are liquidity ratios, activity ratios, profitability ratios, leverage ratios. Each type of ratio will consist of a different type of ratios again, which will be helpful in understanding the performance of the organization. So you can take any one from the liquidity ratio, any one from the any one two from the profitability ratio, and you can also take any one or two ratios from these two types. Okay, so it's up to you, like which one you choose. You choose the ones that are easy to calculate. Okay, so cross check this link. You'll understand the formula and how you can calculate each ratio. Okay, so this is the link which helps you to understand what kind of ratios you can calculate. Okay, so the next part is you will be allocated with an organization. One we might have selected in week two, otherwise the one that is allocated to you by us at present. Okay, so for that organization, you are supposed to go to SEC website, like it is a US accounting department one, like in which everybody has to, like it's like for us in India it is MCA, Ministry of Corporate Affairs. In the same way, they have SEC to which every company has to submit their accounts. Okay, so just click on this one and search your company name, maybe like AT and T is the company, so AT&T INC. So when you click on that, you will see different types of filings here. So in that, you will see annual report like this, maybe 11K, 10A, 20K. These are usually annual reports. So this is 10K by A means amended or after processing, you get that information in that thing. Okay. So here you can see annual report reporting for 2022. So though it was generated and filed on 2023, 23rd June, it belongs to 2022 annual year. When you click on that, it comes like this. Click on open document. you can say every detail in this one. Okay, it speaks about different type of details about the organization. Okay, so maybe continuously it got updated. So now let us see the profit and loss account. Check for balance sheet. So let us do it. This is the updated one, I guess. Go to first one. Sometimes they give it in a different format. So we have to cross check total assets. So small correction. When you are searching for this, better you select financial filing category where you can see all annual, quarterly, and current reports and click search. So based on that, you can get all these things. Ignore 11K. So search for recent 10K. So you will get 10K in the document. This is the annual report actually. Okay. So you just check in that format any 10K, very recent 10K is available or not. If recent 10K is available, then that will be the annual report. Okay. So if you don't find any, you just scroll to down and find 10K annual report. So this is for 2021. So it means that 2022 is not yet completed. So for 2021, you can check it. Okay. And now in this one, you can clearly see the financial exhibits. Okay. In 127 page, part where financial statements and supplementary data. This is where we can get financial statements. So this is a consolidated statement of income from this is what we call like profit and loss account or income statements. Both are same. Okay, this up to here it is income statement. Now next it is consolidated balance sheets. So this contains current assets, current liabilities information, and other things. Next, you will be having cash flows related data. Okay, these three statements are very important in understanding financial loss. Okay, so for example, if you're calculating quick ratio, you need data about current assets. So this is current assets, total current assets you have to take. This is total current assets. This data is for 2021 and this data is for 2022. Current assets divided by total current liabilities. So you can see that 59,000 here, 85,000 here, 59,999 divided by 85,000. That you have to calculate here. Similarly, for 2020, it is 52,008 divided by 63,348. That we have to calculate. That gives you quick ratio values for 2020 and 2021. You can clearly understand whether it is increased or decreased. So based on that, you can calculate. So whatever the ratios you calculate for that ratios, the information will be available from these sheets. Okay. So make sure you take proper information and calculate it in a better way. So I need just four ratios. You take data onto Excel sheet. For example, as the detail is for annual report 2021, 2021. For 2021, you take values, 2020, you take values. Okay. Otherwise, 2020 first, then 2021 first. So based on the equations, you understand what kind of details you are supposed to calculate. Maybe, for example, current assets are required. So current assets will take it. Next, current liabilities are required. So current liabilities. So from in this way, you have to take whatever the values that are required, then take values here. So here, current assets value we need. So I'm going back to the statement. And here I have current state, my current assets value, total current assets is 59,997. So I'm just copying it here. Okay, so here I will copy it. I will remove comma and I will keep it manually. Next one I have 52,008. So I have two values now. Now current liabilities, total current liabilities I have here 85,588. Then 63,438. So these are values. Now we want to calculate quick ratio. Quick ratio, we will give formula, maybe like current assets divided by current liabilities. Okay, so it's equal to, for 2020, it is equal to current assets divided by current liabilities. Okay, 5,997, 5,997, 52,008. They are in thousands actually. Okay, for 2020. And again, same for 2021. What will the value? It's equal to this divided by this. So actually, this value is for 2020. So these values were, rather than taking as numbers, usually like in the previous video you saw that this as this like numbers, decimal numbers. Now I converted it into percentages. If you cross check, the percentage is decreased when compared to 2020. Quick ratio percentage should be increased because to make sure that the value is increasing, the current assets value should be larger because it is numerator. When the numerator value is larger than denominator, the value will be high. Okay, usual practice. So for any organization, current assets should be larger, current liability should be smaller, which when only in that situation the company performance is said to be good. Okay, so in that way you have to assess. So one more thing is like make sure you read all these concepts like what is current asset, what is current liability, why they are important for organization, what they speak about. These things you should understand to ensure that you write a proper interpretation. Okay, so you give better content and better information. All the best, team. Thank you.